Good afternoon. You're watching Businessworld Live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Thursday. All right, local shares today unable to sustain gains after closing near its three-month high on Wednesday. The index today finished down by 0.7%, 791.83. Some last-minute buying happened before session closed, but not enough to make shares climb out of the negative territory. Despite that, offshore investors continue to buy local stocks for the fifth straight day. Net purchase today at 1.9 billion pesos. Now, looking at our leaders and laggards here, GT Capital is still the day's worst performer here. That's down 3.25% to 595 apiece. Now, Aboitiz Power and Aboitiz Equity Ventures both down over 2%, while SM Prime declined by 1.7%, even as it inked a deal with CDC for the 3.2 billion peso intermodal transport station in Clark. Pure Gold also in the red, as you can see right here. It's after a share buyback transaction worth 3.8 million pesos for 100,000 shares. The retailer is down by 0.9%. Now, on the upside, you have the PLDT ending the day in the green. The telco player bear that it has fired up more than 3,000 5G sites across the Philippines. PLDT now at 1,318 a share. Now, FGen is also the day's second best performer after it executed a 10-year time charter party with Svitzer. So the deal is for the provision of towage and other vessel support services for their offshore project. FGen price at 31 apiece, up by 1.6%. Now, one other stock here that we have to be looking at from the all shares is SM Food and Beverage. It is constructing 7 feed mills for a total of $350 million or around $50 million each. President Ramon, however, says that CapEx will be at 30 billion pesos more due to ongoing expansion. This as he sees encouraging signs with the mass vaccination and easing of restrictions in the country. San Miguel Food and Beverage ended Thursday at 70 pesos and 75 centavos a piece, higher by 1.8%. And lastly, let's have a glance at our lenders. The gauge today ended on the downside, lower by over 0.1%. The BSP has ordered banks to further enhance the filing of suspicious transaction reports with the AMLAC. This is part of the government's intensified effort versus money laundering and terrorist financing. Other than that, in an interview with Nikkei Asia, BSP Governor Ben Jocno said he expects bank lending to pick up as restrictions ease. He also signaled possible cut to banks' reserve requirement ratio, calling it still high at 12%. He's also not closing doors on more monetary easing if necessary. Among lenders, Security Bank capped off the day with the biggest gain, up 1.6%. On the other hand, you have China Bank ending the day as a worst drag, at least for the sector, down 1.8%. Now, while we are on banks, what prospects await the country's lenders? They may have managed to stay afloat amid the pandemic, but can they withstand additional pressure? Let's find out from the Associate Director for Asia Pacific Banks at Fitch Ratings, Tamma Febrian. Tamma, good afternoon.
Hi, afternoon. Nice to be here.
All right. Again, we're talking straight. We're talking to Tamma. He's coming, of course, from Singapore. Now, you have the Philippines here lagging growth among ASEAN economies with a downturn being one of the worst in the region. How does that color your outlook for banks?
Yeah, so I think just to start off, when we talk about outlook, we here at the rating agencies, we actually assign an outlook on two different matters. One is a rating outlook and one is on the sectoral outlook. So when we look at the bank's rating outlook, so all the banks that we cover in the Philippines right now have a stable outlook, but this is merely a function of the fact that, the ratings of these banks are driven by our expectation of government support instead of their standalone credit strengths. So unless we see some sort of a weakening in a state's ability and propensity to support these banks, the bank's ratings are unlikely to remain unchanged. Now, I guess, if we're probably more interested in the sectoral performance outlook. So we think that the things are a little bit more dicey here. We think that the risks are remain tilted to the downside despite some of the recovery that we have seen right now. And this is largely due to the continuing challenging operating environments in the Philippines. I mean, if you look at the first quarter GDP figures, it's quite clear, like I said, that the country is basically underperforming a lot of the countries in the region. And I think given the continued restrictions on, a level of restrictions in the mobility as well as the high infection rates, we think that this economic weakness will continue to prevail in the foreseeable future, and that would have quite a negative repercussions on the banking system asset quality and profitability.
Now, interesting that you are saying that, Tam, especially considering that you have BSP Governor Ben Jokno in an interview with Nikkei Asia, banking really on ease mobility restrictions. You're saying that at least is going to boost bank lending. Do you subscribe to that?
Well, that's the thing. I mean, I think lifting of restriction is definitely a good thing. That will, somewhat improve economic activity. But, you see, we think that, if, let's say, for example, the restrictions are lifted, but if the vaccination rollout is not, is still quite slow, and then if we see that the infection rates continue to be, to be high, or even if there's a resurgence of infection rates, we think that the consumer confidence will likely continue to take a hit, and likely to result in lower economic activity and ultimately also business prospects at the back. And I think last year, we have seen that, when things appear to look like as if things are improving and there are some easing in restrictions, loan growth didn't exactly recover then. I think the loan growth was actually continuing contracting up until now. So I think that the same dynamics could also occur in the future if some of these issues continue to persist.
Now, also at the same time, of course, one thing we have to be considering here: bad loans. I mean, are we expecting that to pile up some more for the remainder of the year? Of course, that after it shrank as much as 5% in April.
I think in terms of the NPL ratio, yes, I think we are expecting continued deterioration in the NPL metrics for most of the banks, and I think. It's not just us. I think most of the market analysts would agree with me that, but from our perspective, we think that the NPL ratio would actually, rise to nearly 6% by the end of 2021 from around 4.3% in March. And this takes into account the continued credit migration from all these loans that had benefited from the debt moratoria, which expired in 2020, as well as the relatively weak environment. So, the ratios may improve next year, but again, right now, it all depends on whether or not we can see an acceleration in the economic recovery momentum. But as you probably already know, we have the FIS law that was enacted in February 22, which actually could provide an upside to some of these projections if the banks start to more actively try to tap into this venue to dispose their bad assets.
At what level, at least, do you see NPL ratio parking at the end of 2021?
Oh, it's like I said, it's around 6%. So it will be around 6%, but and then after that, it will recover from there. So we see that the NPL ratio kind of peaking this year, provided that there's no another shock in the system.
Now, also, you have a Jokno in the same interview describing at least banks' reserve ratio requirement is still high at 12%. Your reaction to that, and what would you see? What would you say is ideal level then?
I'm sorry, what was that again? This reserve requirement?
Reserve requirement.
Okay.
Yeah, 12%.
I can't really comment on, what would be the ideal, but I think in general, if we see the reserve requirement continuing to trend down, that would actually be net positive for the banking system, because that's basically, assets that, more revenue, more interest margins that they could receive, because a lot of these assets are parked, as merely a cash, not generating anything. But I don't think that at the end of the day it will be a very significant impact. Especially considering the fact that I think BSP is likely to to reduce these rates, on a gradual basis. It won't be like a straight cut from 12 to, let's say, single digit anytime soon.
Okay, but overall, just how profitable do you expect banks to be this year? At the same time, what possible bright spots could they bank on to at least somehow bolster growth?
Yeah, so I think right now, if you're talking about near term kind of scenario, it's a little bit tough to see where the bright spots are for these banks. Right now we have revenue headwinds kind of hitting the banks in all different areas. Firstly, on the margin perspective, the banks have benefited quite a bit from a lower funding cost last year, thanks to very supportive liquidity conditions. And to a certain extent, we think that right now the margins will probably compress instead of actually expanding, because as asset yields continue to play catch up with funding costs. And then there's the growth opportunities, which we kind of discussed a bit, that where we think that is, we don't expect the loan growth to kind of to go into the pre-pandemic level anytime soon. It's probably going to be flat, or trying to make up for the loss what they had last year. And then there's also the big part of which the large trading gains that a lot of the banks have managed to gain last year due to the ultra low interest rate environment. So a lot of these revaluation, we think that is unlikely to occur this year. So all in all, I think in terms of this year, it's quite muted in terms of outlook. I mean, next year will be a different case, but again, it all depends on the economic recovery story.
But should we at least expect some level of pre-pandemic growth by 2022?
Yeah, I mean, right now our expectation is that it could actually grow to like a high single digit or mid-teens level by next year. But right now the system is very much flush in liquidity. A lot of borrowers are actually holding on to cash flow. A lot of these growths may actually be quite delayed, because a lot of them will just tap onto their liquidity facility right now, their excess liquidity right now to fund any expansion growth.
Well, at least for 2021 or in the near term, growth expected to at least still be muted for banks. Thank you very much, Associate Director for Asia Pacific Banks of Fitch Ratings, Tamma Febrian. Thank you, Tamma.
Yeah. Thanks for being here. Thanks a lot for your time.
Here are other headlines we're keeping our eyes on. Jollibee has ordered the temporary shutdown of its Bonifacio stopover branch in Taguig after the incident involving one of its major food offers. The fast food giant says the franchise store will be closed for 3 days starting today to make way for a thorough review on food preparation compliance and staff retraining. This comes after the viral post involving a Chicken Joy order that upon closer look turned out to be a hand towel covered in breading. Jollibee says it started an investigation into the incident. Meanwhile, in a regulatory filing, Jollibee said it is revising its articles of incorporation so it can venture into property investing. Jollibee said the amendment would allow it to invest, acquire, and sell real and personal properties in line with its business objectives. The company said its stockholders have approved the proposed revision. Energy Secretary Alfonso Cusi issued an apology over the rotating power outages in Luzon in the last 2 days. He says power supply at over 11,000 megawatts is now more than sufficient to meet projected demand. NGCP spokesperson Cynthia Alabanza says yellow and red alerts have been lifted as of yesterday after a major power plant resumed normal operations. The Energy Department insists circumstances beyond control are to be blamed for the temporary shortage in power supply, particularly the simultaneous damage reported by several power plants in the region. And the World Bank will also extend financial assistance to the Philippines to develop its seismic resilience. The multilateral lender approved $300 million in funding to be used in making select public buildings more earthquake resistant. The budget is seen to boost the capacity of the Public Works Department in preparing for natural emergencies. The World Bank noted the need to enhance safety capacities of buildings and structures in Metro Manila, which serves as the Philippines' economic center. The World Bank has earlier extended loans to the country for its pandemic response. And those are the biggest stories this trading day, June 3, 2021. Catch Business World live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.